Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for August 8th, 2019. We're talking a big market move in stocks, but that's not the only thing moving today. We'll update our technology bounce positions from Tuesday night's video, but also focus tonight's main topic on intermarket, which is basically where is money flowing outside of equities in terms of gold, bonds. That's, I think, our biggest interest might be in there today, and of course, crude oil. First, let's start with the S&P. We can see on our grid that the S&P was up 2%, Dow futures about 1.5%, Nasdaq was the biggest gainer for almost 2.5%, and the Russell 2.25%. Remember, we're looking at technology names for potential bounces, including Intel, Facebook, Amazon, especially Microsoft. Some of those are nearing or closing in on targets like Google. But in the sector movement, the biggest here was actually not technologies. It was crude oil. So technology sector XLK was up 2.5. Nasdaq was up about that. They similarly track each other. But the XLE, which is energy or crude oil at this point, mainly, was up almost 3%. The weakest sectors of the day, staples, healthcare, and utilities. Those are defensive names. And it's exactly what you would think. If money's flowing into the equity market, it's going to chase performance. And the performance is going to come from financials, technology, discretionary, and the like. It won't come from the defensive names like staples, healthcare, and utilities, but that's a conversation for another video. Now, let's focus on this breakout of this 2880 level that has taken us through Dawn's gravity spot at 2911 and is putting us back to the prior closing high in just a little bit shy, actually, of 2950. That's the S&P. I think it's a key level to watch for the next trading session, Friday, and then maybe into next week, which is roughly kind of an even number here, back of the envelope. It's roughly 2950. A little bit shy of that, but close enough for the S&P futures. Now gold, we'll just talk comparison. We'll look at each of these individually, but right now, gold has its pivot off of 1,500 per ounce. Key level there. Bonds, just above 130, but this 129, that is a horizontal support level that we are seeing an intraday reversal and a big bounce. Your biggest move, despite everything, not percentage-wise certainly, but in terms of rapid movement, was in bonds. Down, then up. Equities were straight up. Gold was, again, down, then up. And then crude oil maintained its highs on a trend day to the upside. Now, let's compare these individually. We'll do a comparison chart. We'll actually look at this on the hourly is over here, and the daily is at this point. Like it or love the term, this is a dead cat bounce, or at least a relief rally off of this 2820 or 2811 or 2800 spot for the S&P that has taken us back to this 2950 level. It will be the focal point for the rest of the week. This is just Friday and into next week. We mentioned that earlier. We can see how that played through an open air pocket or a low volatility or low volume node that helped create this short squeeze or bullish trend day. We can look at gold, which had its own movement. This, I think, is fascinating. Gold and other commodities do tend to trend or move in the same direction multiple days in a row more frequently than you would see in the equity market or an individual stock. So gold had its breakout or bull reversal play in May. That was off the 1275 per ounce level. A bull flag or triangle or high volume breakout took it up to this 1350, and additional upside breaks helped create this sideways consolidation. And now we have this 1, 2, 3, 4 days in a row. Looks better here in the hourly chart, break to the upside. So going forward, 1,500 is your spot for gold. If you manage to capture some of these gains, take your profits, run, be safe. If gold trades under 1,500, that's when we can see it pull back, retrace, or trade down toward this 20-day exponential moving average. That's going to intersect about 1450, 1475, thereabout. I think your interesting market also is crude oil. It's achieved this 50 per barrel level. That is a spot that goes back to late 2018. This little push to the upside, rotation back down, all the way to our 60 per barrel target, actually a little bit above it, and then all the way down through 55. That was a short-term buy, and then a near-term or short-term now breakdown with the equity market to 50 per barrel. That is the pivot point. Gold, remember, is $1,500. Crude oil is $50 per barrel. This is a pivot point, and pivot points mean we have a chance to go long into support, or if you did trade down toward here, take your profits on a bear or short position and look to cover. If crude bounces, it can trade all the way to 55, maybe even up to fill 57.50. The alternate thesis or a breakdown thesis, and this would occur with the equity market falling apart, could be crude under 50 per barrel. We can look at Treasuries. We'll look at ZB first. That is your 30-year Treasury note. This is the bond market surging, yields declining. We look for yields to trade under 2%. In the 10-year, that happened. In the 30-year, you're seeing similar rapid upside movement that was cross-checked or reversed in today's session. I prefer to look at ZN. That is your 10-year Treasury. Our key level, again, is 127. There's the upside break, upside bull flag. There's been 3 of them so far. But remember, what happens when a market is overbought or overextended? It does tend to pull back. Any number of examples can show us that. So a better trade is to look to short or play against this 130 level, but that most of that may have already occurred, at least in yesterday's and today's session. And that is because we did get a bull bounce or support play initially with a pretty strong close into this 129 level. This also plays out if you don't trade bonds with TLT, which is your longer term Treasury, or IEF, which is your 7 to 10-year Treasury note. These are tradable levels. It's about 111.75 cents. That's the main picture of perspective. We can also look just a quick update on some of the stocks that we had. Google is a bull bounce play recommended off of this 1125, 1150 level. That is achieved today, 1200, but we're looking for at least 1225. It's a big trend day to the upside. Big reversal off of 1150, and that has led anyone taking an in-out spread, bull vertical, or other call strategies into the profit zone. So 1200 is at least a minimal target. It's a round number, but ultimately it may trade up to 1225. Amazon keeps its bull rally in motion. That came off the 20 or the 200-day simple moving average and a rising trend line. That was 1750. A couple days later, Amazon trades into 1830. I think it may trade up to 1900, but we're going to watch this as it trades higher and be careful on any type of sudden reversals. Again, that could occur with the market, so always watch the market with your individual stocks. But we're seeing this strong bounce play like we saw into June. There are many of the names to look at, cover, and watch. We'll just take us back to our intermarket grid. This is in terms of money flow. We've had that sell-off. We've had the Fed. We've had China. We've had central banks across 3 central banks lower interest rates this week. So there's a lot of news, a lot of headlines, and certainly a lot of money flowing across the intermarket or the global markets. This is a good way to keep track of it, even if you don't trade these particular commodities. Always keep your eye on this if you're just trading equity futures or stocks in general. But as always, be careful and safe. This is Corey Rosalind with your Theo Nightly video for August 8th, 2019.